What's up everybody? Welcome to the Stocks channel. My name is Corey and today we had a very volatile day in the stock market, ending at the lows of the day and closing the gap below. Are we going lower from here? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we did see SPY closing near the low of the day, going down 0.72% and closing that gap below right around 435. So there is a lot to talk about tonight, so let's jump right in. Now the first thing I want to point your eyes to is the weekly chart of SPY. And remember, we're watching the weekly chart because we are at this critical support level, which is our 20 simple moving average on the weekly chart. We still have a positively sloping 20 simple moving average, and we want to see the Friday's closing above this level, which we did get with last week's price action. This is a brand new week and one day does not set a trend, so we need to see where this candle closes at the end of the week on Friday. The bulls need to close SPY over 437 because that's where the weekly 20 simple moving average of support is. If the bulls start losing this support level, you could see on the weekly chart we're also starting to lose the bull trend if we lose critical support. So SPY 437 is by far the most critical level for the week, but you need to see where we close at the end of the week on Friday if you're looking at this macro level chart. So SPY 437 is your macro level trend level that the bulls need to close above and the bears need to close below. So now that you know the weekly trend, let's jump over to the daily trend, and we can see on the daily trend we do have the bear trend. We're still below this resistance trend line even though we did try to break out the last couple of days. So we're back below the resistance trend line and we do have the bear trend, and by far the most critical resistance level is right around 439. And that resistance is coming from the 50 EMA. All of these moving averages are negatively sloping, so on the daily chart, you can definitely see a lot of downward momentum. So looking at the daily chart, the critical support level to watch is going to be 434. This is a pivot trend line that we did have from the highs, and this could be a support level that we are coming into as soon as tomorrow. If we lose 434 as support, we could be coming all the way back down to about 429. And remember, below 429, we have our support levels at 425, 419, and the gap closed down here at 411. So for the time being, you could see we're clearly still in this downtrend, and we did get a failed breakout look, but it's still way too soon to say that we're going much lower. If I put this over to a 1 hour chart, you can still see on the 1 hour chart, we did look like we hit a bottom and we're starting to form higher highs and higher lows. Looking at this chart, you cannot deny the fact that this was a higher high and a higher low situation, and we could currently be in the process of putting in another higher low and then go up here to close this gap at 442 to put in another higher high. So on the 1 hour trend, we still do have a bull trend of higher highs and higher lows, but the bad news is that the daily trend is still downward. So this is by far the very early stages of what could be a trend reversal, but you never know exactly if you're going to get that trend reversal until you get the confirmation of that higher low. So if we get down here to about 434 and we start to bounce and we come back up here to close the gap at 442, that could mean that we did see the bottom down here around 427 on SPY and we are going back into another bull cycle. By far, looking at this chart, you can see that we're definitely starting to impulse higher, and you could see a really nice impulse move followed by a corrective move here. And then we do have another impulse move followed by another corrective move. If you don't know the difference between an impulse move and a corrective move, it does help you understand the direction of the market. Impulsive moves are very directional and they do go in the direction of the trend. So we could easily see the impulsing higher and then the choppy sort of price action lower, which is a counter trend move to the downside, which does tell us that the move is corrective and not impulsive. So I could easily see a situation where this corrective three-wave move comes down to support, and then we could see the bulls buying the dip, driving the price action to another impulsive leg higher. That could easily take us to 442 to close the gap, or 444 or possibly higher. So watch that critical support level at 434 because it will be a very key level that the bulls might try to buy off of and send SPY to the next leg higher. If we lose that level of support, look for this higher low situation, because if we start breaking back down below 429, we'll no longer have a higher low and the bear trend will start to take over. Remember, looking at the daily chart, we are still in a downtrend, and this was all just a failed breakout look for the time being. This is a failed breakout until it's not, and you can clearly see we're still in the downtrend on the daily chart. So if you're trading off that hourly chart, as soon as we start breaking down below 429, you know that we're forming a lower low and the downtrend is starting to take back over. So watch that critical support at 434 and 429 with your critical resistance at 436 and 439. If we start closing back above 439, the bulls start to take over, and if we start closing back below 429, the bears still have full control of this market. Jumping over to the NASDAQ 100 triple Qs, we were also ending at the low of the day, going down 0.77%, and we see the triple Qs are still below our resistance trend line. Remember, we're watching for this possible completion of this ABC correction, and we might have started to impulse higher, and now we're just getting the counter trend move before we start impulsing higher again. We close the gaps below on SPY and the triple Qs, and we now just have gaps above. The triple Qs gap is up here at 367.7, and we're now going to see if we're going to try to bounce off support and go up there to close that upper gap. Remember, I told you it was the battle of the gaps between the gap at 360 and the gap at 367.7, and we've clearly now closed the lower gap, so we just have that gap above. You could see today we also did get the confirmation of the full bear trend because the 20 simple moving average did cross below the 50 EMA. So by far, looking at the daily chart, we are definitely still in a downtrend, and we now have downward momentum that is confirmed with the full bear trend. So you still need to be very cautious of more downside because we do have the confirmed bear trend. But on the 1 hour chart, it's the same exact story as we see on SPY, and we are still in the process of forming higher highs and higher lows. As long as we have this potential higher low being put in right around 358, we could easily bounce off of this level and start impulsing higher to close the gap at 367.7. That would be yet again another higher high, and then we can start to see a trend reversal on the 1 hour chart. So if you're trading the 1 hour chart, you do have the advantage of a bull trend because we are forming higher highs and higher lows. But on the daily chart, you need to be a lot more cautious, and if you're swing trading off the daily chart, you do have to respect the fact that we are in a strong downtrend. So on the 1 hour chart, the next lower low would be a break below 354. As long as we're above 354, we could potentially be putting in another higher low, and we could bounce off of that low to go close the gap up there at 367.7. Just like on SPY, you can see that we're clearly impulsing higher, pulling back in a corrective move, impulsing higher, and now pulling back in another corrective move. As long as we see impulses to the upside and corrective moves to the downside, this is still a bullish price action move. So we're looking for impulses higher and 3-wave counter trends before another impulse higher. So this is still possible. We're going up there to close that gap off of these support levels. So let's also jump over to the weekly chart of the triple Qs, and the level the bulls need to close above on the triple Qs will be just above 362.23. If the bulls can close back above the weekly 20 simple moving average, we'll very likely not lose the bull trend. But if the bears can close the triple Qs below 362, you can see that we are going to lose the bull trend on the triple Qs. So this is going to be a very important week, and we're going to see which direction this market is going to take by the end of the week when we see where we end up closing. If we close below the weekly 20 simple moving average, we could be coming all the way down to the weekly 50 EMA and complete this deeper stock market correction. If the bulls can close above the positively sloping 20 simple moving average, the bull trend will still likely be intact, and we could go higher for that next leg higher. So watch the weekly charts at these levels because they're very critical, and you can see the 20 simple moving average has been very respected on the triple Qs, and every time we get down into this level of support, we do see on the weekly chart that we wick below that support level, but you have to go by where the candle closes the week. So you can't trade off a weekly chart until you see where we close on Friday. So by far the most critical level to pay attention to will be the weekly close on Friday to see if we're above 362 or below 362 on the triple Qs. So jumping back over to the daily chart, your critical levels on the triple Qs will be 358, 354, and below 354, we're very likely coming down to 347 or 342. If the triple Qs can stay above 354, it's still very likely we could form another higher low and go close that gap above, so don't rule that out as a possibility. We'll have upside resistance now at 360, the resistance trendline breakout level right around 363, and we still have resistance at 365. So there's a ton of resistance above, so watch those levels closely. On the Dow Jones, we were down 0.73% today, closing at the low of the day, but still holding up above that 20 simple moving average. The Dow Jones was almost on a 3-day streak of closing back above the 50 EMA, but that streak did end with today's price action. The Dow Jones did not fully close the gap below, which won't close until we get back down to about 344.3. Once that gap closes, the bulls could find support, and again, this could be another higher low situation before next leg higher to form another higher high. So you can see on the smaller degree trends on the 1 hour charts, we are starting to form a bull trend, but you need to be very cautious on the weekly and daily charts as we're at very critical support. So your support levels on the Dow will be right around 344 and 341.8, and below that, watch the previous critical support at 339. Below 339, we could come down to support at 336.76 or the gap close at 332. To the upside, we have resistance at 347, 348, and 351. On the Russell 2000, we were down 0.57% today, and we did close the gap below. So out of all of the indices, the gaps below are closed except for the Dow Jones. We still have support on the Russell 2000 right around 219, and below that, our support trend line is right around 217. And if we break out of the support trend line, we're very likely coming back down to 215 or 212, and below 212, the floor falls out and we go much lower. To the upside, look for resistance at 222, 224, and the resistance trend line level right around 225.78. On the ARKK ETF, we were down 0.33% today. And remember, the ARKK has a confirmed price target at the 102 support level because we did get the confirmation of the double top. We broke the neckline, so the price target is 102 until we break back above 115.5. Look for resistance right around 113, and below 113, we have support at 109, 106, and the price target at 102. And if we break below 102, look for support at 99. On the VIX, we were up over 6.5% today, and we see the VIX closing right around that level at 20. Remember, the VIX above 20 means we're likely going into a deeper stock market correction, and the VIX below 18.2 tells us we're likely going back into a bull market. So the VIX is in this decision territory if it's going to break back out above 20 or get crushed back down below 18.2, and you really can't look at this chart and make a call in either direction. We closed right below 20, and we did bounce off of the support at 18.2, so we're really just trading between that range and not knowing exactly where the VIX is going to go. We're either going to break out above 20 tomorrow, or we're likely going to see the VIX start heading back down below 18.2. Remember, below 18.2, the VIX is telling us that we're going back into a bull market, and the VIX breaking out above 20 tells us to expect a deeper stock market correction. On Bitcoin, we're currently up over 4.7%, and we see Bitcoin did regain the full bull trend, and we are starting to look a lot more bullish on Bitcoin. Remember, this is a great measurement of risk on sentiment, and if Bitcoin is going back into a bull market, there's no reason to believe that the stock market can't as well. We have this really nice ABC correction on Bitcoin, just like we see on the triple Qs, and we're now starting to get this impulse higher, which is telling us that investors are out there in the crypto market taking on a lot more risk, and Bitcoin is very close to our price target just below 59,000. Remember, above 59,000, it's very likely Bitcoin's breaking out and going to run to brand new all-time highs with price targets at 67,000 and 75,000. As long as Bitcoin is trading above 45,000, I think you need to stay on the bull, and the critical support level will now be right around 48,000. So Bitcoin is looking more and more bullish as we see more risk on sentiment in the crypto market. So now that Bitcoin has the full bull trend, you can buy the dip, and you can see all of these support levels below at 52,700, 51,000, and 48,000. Amazon was down 1.29% today, and we see Amazon closing back below the negatively sloping 5 EMA, and we still do have the full bear trend. Remember, Amazon is still in a downtrend, which does mean we could be getting rejected at resistance and coming back down for that next leg lower of support at 31.36. We have the full bear trend, and we don't want to get bullish on Amazon until we can get 2 decisive closes above that resistance level at 33.11. As soon as Amazon starts breaking out and holding above 33.11, we could get back on the bull, and we still do have gaps to close at 34.52 and 35.80. But as long as Amazon is below 33.11, look for that possibility that we're coming down for that next leg lower of support at 31.36. There's also a potential of a double bottom off of that support level at 31.85, so watch that level as well. On Tesla stock, we were up 0.82% today, and we still see Tesla looking full bull with price action above all the moving averages, and we still do have the full bull trend. Remember, we need to see Tesla break and close above 800, and we could start running to our next price target at 825. Above 825, we're very likely going to retest the previous all-time high, and we could attempt to break out and run to a new all-time high as well. Your critical support levels on Tesla will be down here at 770, 765, the breakout level at 746, and the most critical support level is still at 732. If we see Tesla closing below 732, it's very likely rolling over and going into a correction, but right now there's no reason to believe that Tesla is not going higher as long as we have the full bull trend. On Apple stock, we were down 0.06% today, and we see Apple still closing above that support level at 142. Remember, Apple still has a gap to close at 137, so if we lose support at 142, we could go down there and close that gap before we see Apple trying to go back into a bull market. But there's no guarantee that gap has to fill, and right now we do see Apple closing above support. So you do want to watch the next resistance levels above at 145 and the resistance trendline level just below 150. If we can see Apple reclaiming the 50 EMA and closing above 145, we could see Apple regaining a bull trend and potentially trying to break out. Below 145, watch support at 142, 139, and the gap close at 137. On the financial sector, we were down 1% today, closing right on top of the 5 EMA, and we still do have the full bull trend in the financials. The industrials were down 0.8% today, closing just above that 20 simple moving average, but we still do have a lot of bearish momentum and bearish trending. We need to see the industrials getting back above that 50 EMA to reverse the bearish momentum. The healthcare sector was down 0.78% today and closing the gap below, but we still do have price action below all the moving averages and the full bear trend in the healthcare sector. On the energy sector, we were down 0.37% today, and we still see the energy sector looking extremely bullish with price action above all the moving averages and a very strong bull trend. So jumping back over to the S&P 500, this is without a doubt still a very volatile market, but this is not a market you should be getting overly bearish in at this time. We have a lot of bearish trending, but price action is king, and right now in the short term, we still see price action forming higher highs and higher lows. You can see even though today was a very ugly sell-off, it was all on decreasing volume, so it wasn't like we're getting that elevator down high volume selling. So watch that key support level, and as long as SPY forms another higher low, we are still starting to reverse the downward trend as we turn the corner and start into a potential another bull rally. If we start breaking down below support, watch out below because we are still in a confirmed downtrend on the daily chart. And don't forget to pay attention to where the weekly candle closes because we are on a very important critical level on the weekly chart as well. Protect yourself to the downside, but don't get overly bearish as long as we're starting to see bullish developments in the short term. Also, don't forget that I do have my own trade alert service called BANC Trade Alerts that only trades TQQQs. And with the current market conditions, I think this is a great time to be a BANC member. I'm currently running a 50% off promotion code for your first month. So now could be the best time to try out BANC Trade Alerts. You can find out all of the details and how to join by clicking on the links in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link below. So thanks for watching everybody. I hope you're crushing this market, and as always, I will see you in the next episode.